Welcome to Dr. Fred Markets. This is not financial advice. The gap between those who understand finance and those who don't is growing every year. Markets, crypto, artificial intelligence, they just require attention. You showed up today. You're on the right side of that gap. Let's make it count. Let's go.
Your favorite drama isn't the bear, it's your 401k. Here's the first signal. California's new billionaire tax is headed to the ballot. The target, people with over $1 billion in assets, plus a lower tier for $50 million and up. But here's the twist. The tax hits wealth, not just income. That means illiquid stakes in private companies, VC funds, even early-stage rockets to nowhere. They're going to get priced, repriced, and potentially dumped. Second signal. Defense and drone spending is exploding. Ukraine's drone armada is overwhelming Russian air defenses. This isn't a YouTube highlight reel. This is procurement budgets going vertical. Drone manufacturers, sensor suppliers, satellite recon, battlefield software. This is a full new industrial stack. And guess who owns the early, messy, insanely profitable layers of that stack? Not you. Private credit funds and private equity. The same people California just decided to bleed. Third signal. Private credit is now larger than junk bonds, over $2 trillion globally and growing. Pension funds, endowments, and the same tech billionaires you hate watch on Twitter shove money into direct lending funds that act like shadow banks. They finance everything your bank won't touch. Rockets, drones, weird manufacturing, sketchy turnarounds, and juicy dividend recaps. This is where real yield lives, unregistered, unlisted, and mostly unavailable to you. So here's the cliffhanger. What happens when a state decides to tax those private fortunes just as a war-fueled, drone-heavy shadow banking machine starts printing 12 to 15% yields in the dark? The connection nobody on CNBC wants to spell out. We're splitting into two financial realities. On one side, you, index funds, maybe a little QQQ, maybe an Apple or Nvidia share when they're on sale. On the other side, the billionaire class. They don't just own stocks, they are the bank. They lend to defense startups. They fund drone manufacturers and suppliers. They underwrite bridge loans to companies caught between war-driven supply shocks and demand spikes. Why does the California wealth tax matter here? Because you don't force predators to hunt less. You force them to hunt smarter. If California taxes wealth annually, billionaires need yield that outruns that drag. A 7% passive return in S&P isn't enough when the SERF is 1 to 2% wealth tax, plus federal, plus state income. They chase 12 to 20% IRR. That means more money into private credit, especially into juicy, politically touchy stuff. Financing drone parts and logistics, the Pentagon wants yesterday. Lending against inventory for defense manufacturers. Funding dual-use tech, mapping, satellites, sensors, under boring holding company names. You watch.
Does what you just heard shift something for you? That feeling, that need to know more, is exactly the right reaction. Most people never get there. You just did. Let's keep going.
War footage on Twitter. They see 3-year secured loans paying double-digit yields, backed government contracts that never bounce. Here's the mechanism. 1. War and geopolitical tension turbocharge defense and drone demand. 2. Governments already drowning in debt lean on private capital to fill gaps. 3. Private credit funds structure loans with collateral, covenants, and sometimes equity kickers. 4. Billionaires plug cash in, get chunky coupons, and park exposure far from public markets and public anger. Now toss the California tax on top. The more you tax transparent public holdings, the more attractive these opaque, high-yield private loans become. You don't get eat the rich, you get hide the returns. Where does that leave you, the retail investor stuck outside the castle? You won't wake up tomorrow and buy a slice of some $500 million drone supplier term loan. Fine, but you're not powerless unless you stay lazy. One concrete thing you didn't know: private credit ETFs and interval funds are quietly listing for regular investors. Yields north of 7 to 9%, backed not by YOLO meme stocks, but by senior loans to businesses that actually make stuff, including defense and logistics. They trade on your brokerage. Not sexy, not viral, no mascots. Real cash flow. Your action plan. 1. Learn the map. Search your broker for private credit, direct lending, or business development company, BDC. Read the fact sheet, not the marketing brochure. Focus on what sectors they lend to and what yields they lock in. 2. Follow the war budget, not the war headlines. Track defense appropriations, especially for drones, ISR, intelligence, surveillance, reconnaissance, and unmanned systems. Funds lending into those supply chains sit in the boring fixed income aisle, not in the flashy growth section. 3. Shift from praying to underwriting. Stop asking, will the market go up? Start asking, who is getting paid first when things go wrong? That's private credit logic. Senior secured, collateral, covenants. You don't need to be a billionaire to think like one. Verdict. Retail investors obsess over the next hot stock, while the real game has moved into being the lender of last resort for a messy world. California just gave the ultra-rich another reason to abandon the public casino and double down in the private war finance basement. This is not financial advice, but it is the truth. If your entire portfolio depends on price going up, you're volunteering to stay on the wrong side of history. Start learning where the interest checks come from, or stay the punchline in someone else's series finale. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's a wrap for today on Dr. Fred Markets. I hope this gave you something to think about, a new angle, a clearer picture, a better question to ask. Remember, this is not financial advice. Do your own research, always. If this video added value to your day, subscribe. It's free, it takes 2 seconds, and it's the best way to support this work and keep it free for everyone. You'll also find every video as a full article on the blog, drfredmarkets.com, and the newsletter is in the bio. I'm Dr. Fred Markets. See you in the next one.